I'm here to talk to you about the recipe for success in asset management, which relates to the revolution of factor investing. In the 1950s and 1960s, we had this model, the capital asset pricing model, or the CAPM, which said there was only one source of risk in markets, your asset return, how it moves with the market return. And it was beautiful. In the late 1960s, we had a person put on the moon, we had Woodstock, and the CAPM was destroyed by Black, Jensen, and Scholes, very famous people in the field of finance. They showed the exact opposite of what the theory predicted. The CAPM failed to explain simple patterns in markets. Soon after this conference in 1969, other anomalies started to pour in. The key thing about these anomalies is that they did not depend upon the specifics of a company's business, but rather a small set of factors that seem to describe a lot of the variation in markets. These factors, in addition to the market factor, include factors for value, that is our cheap asset factor, size, that's the small cap factor, profitability, companies which are doing well in terms of their profits, relatively speaking, investment, which is again a sign of quality, firms which don't overinvest do relatively well going forward, and then a momentum factor. Winners tend to outperform going forward, losers continue to underperform going forward. This factor revolution has continued with now thousands of products available that give investors access to these patterns at relatively low fees. We have reevaluated many of the patterns we've seen in markets. Hedge funds, which charge 2% and 20%, often load up on these empirical factors. Private equity, which levers up investments in private companies, typically chooses to buy high profitability and relatively cheap companies. The most famous stock picker of all time, Warren Buffett, says that he likes to buy stocks like he likes to buy his socks, high quality merchandise that's been marked down. Maybe he has some secret recipe, some secret sauce, but if you look at his returns, they mainly load on the factors we've discussed.